What's up, guys? It's Mike here, the Modern Canadian. Are you paying too much in taxes? What if I told you that you can pay zero taxes or even get money back every year? In this video, I'm going to show you how to stop taxes from eroding your wealth and help put more money in your pocket. Let's get into it. Hey guys, I wanted to make this video for a while, but I wanted to make sure that I had lived it and that I have actual experience instead of just being a hypocrite and talking about it. So for the past 4 years, I have not paid any taxes. No, this is not tax evasion. Nothing is illegal. I've done everything by the book. I always recommend, and I'm going to start by telling you, you should always go to a tax professional when you do your taxes. But I always recommend learning about this and understanding this stuff so you can go to your tax professional, ask the right questions, and maybe work together with a strategy for you guys to put together. I work with a firm. I have a tax strategist. I don't do my taxes myself. I have a professional, but what I do is I learn it and I can organize my taxes. So when it goes to them, it's just, very easy for them to put it through and whatnot. So I'm going to talk about my story and how I've implemented these tax strategies in what I was doing and how I got started. And I'm going to tell you guys how you can go ahead and adopt these strategies for yourself. So in 2020, the end of 2020, I got into Ethereum mining. I started with one graphic card, and then, a couple months later, as Ethereum became more and more valuable, I guess you could say, I started getting more and more miners. And this was right kind of around, outskirts of COVID. Like COVID was still around. And it was very, very hard. I don't know if anybody you remember, buying graphic cards was almost impossible back then. It was very hard. I was paying like almost double for some graphic cards just to get my hands on them because they were paying out very well. Some graphic cards were paying like upwards of $6 a day in Ethereum mining. And if anybody of you guys know, when it comes to mining, the more the hash rate goes up, the more the difficulty goes up, and therefore the less yield you make. So very quickly, I was starting to lose how much Ethereum I was making, but Ethereum was climbing, therefore I was making more money, so it kind of balanced out. So now I have what was called a sole proprietor business. So a sole proprietor business is basically any income you make will just get tacked on to your normal tax rate, your income, your 9-to-5 work. For all you guys that know me, I'm a mechanic. I fix cars. I do have a 9-to-5 job. I do crypto and whatnot on the side, and I do my content creation on the side. My wife also has a 9-to-5 job. So the idea here is to lower our income with this tax strategy. So like every paycheck you get, you're going to pay taxes. You're going to pay federal taxes every paycheck you get regardless. So the idea is to lower our taxable income through our expenses through the business to be able to get credits back or pay no taxes, right? That's the idea. So what I did with my miners is you have expenses. I built a room in my basement that was for mining, and this room is a portion of my basement. I also use my computer for mining because I got to control my miners from there. I got to remotely log in. So where my computer is another portion of my basement. And then I also have my desk, which is beside me here, which I would build the rigs and maintenance them and whatnot. So a good chunk of my basement was actually used for mining purposes. So I can write that off because I can write off the certain amount of square footage in my basement, which is a portion of my property taxes in my house. And you see where I'm going with this. You have expenses. So the idea is to have expenses in your house or in your business so you can lower those, because expenses are deductible at 100% against income. So whatever expense you have, 100% of it, if it's used for business, 100% of it will be deductible. Okay, so let's go through scenario and how I did my taxes or how I depreciated and used expenses for my business and my miners, and how you can think about it for yourself and you can plug it into maybe something that you're going to do. Maybe switch mining for a different business that you're going to do. So let's break it down. You're allowed to depreciate for computer equipment, at least here in Canada, you're allowed to depreciate, I believe it's up to 30% per year on your taxes. According to the CRA, we have general purpose electronic data processing equipment, commonly called computer hardware, which miners kind of fall into that hardware. 30% per year you can depreciate of the total value until the depreciation runs out. So let's do a scenario. So we bought 10 miners, and it was about we'll just call it $100,000. Okay, so now let's do the math on that. 30% of $10,000 is $30,000. So I was able to depreciate $30,000 in expenses right off the bat. Now the miners, they had a cost to them. At the time, I believe I was paying, I think it was like $2,200 a month. I think it was something like, yeah, I think it was like $2,400. Oops, $2,400 a month on mining expenses. Okay, so $2,400 a month in mining expenses, and then we also had our loan. So I was borrowing that money, and the interest rates kept climbing. So at the peak, I was paying, I think, like $1,700 per month. So let's go with the average, because the interest rates every month kind of kept creeping on as 2022 continued. So we'll just average it out. We'll just say, I don't know, we'll say $1,200, right? We'll say I was paying $1,200 in monthly expenses. So this is the miner depreciation, and then we have the mining fees, and we have our loan interest. Okay, so right off the bat, just these mining expenses, that's what we're costing. Now we're also doing this now, for example, these were hosted, but if I had these at home, I would be paying electrical. Now I did have some miners at home. I didn't fully give up on miners, so I do have miners, so you could depreciate, but we're going to stick with just my hosted mining things. So I didn't pay electrical because it's baked into my fees here. So what I'm going to do is we're also going to depreciate other things I use for business. Like I said, my cell phone. So my cell phone bill, say, was about $150. No, sorry. My cell phone bill was about $100 a month. And yes, Canada, we pay like egregious amounts of money for our cell phone bills. So we'll say I used my phone for maybe 15% business. So $100 times 0.15 is $15. Okay. So we'll just go $15 for that a month. 15 times 12 is $180. So I paid $180 a year for my cell phone bill. And there we go. So I also use a portion of my basement for my mining business, managing my miners, using my computer and managing all that, doing all my taxes and everything I gotta do for business from my main computer. So a portion of my basement will come off my property tax. Now, this is something that you're gonna have to work with your CRA. I don't have the calculation for this, they do. I'm teaching you this so you're more prepared to go to your tax professional and work with them and have all this lined up. So we're just gonna make this very simple. These are my expenses per year. Okay, so this is also for mining. If you're thinking about doing mining, this is your opportunity cost, right? So we have $30,000 in depreciation, and then we have, let's calculate per year now. So $2,400 a month in my mining fees. $2,400 a month times 12 is $28,800. Okay, so $28,800. And then we also paid $1,200 in interest cost. So $1,200 in interest cost multiplied by 12 is $1,440 or $1,400. And then we'll just tack on my cell phone. But we're gonna keep it simple. There can be many different expenses. So we'll go 180 times. That was already times. Yeah, that's 180 per year. 180. So let's add it all together. So we depreciated 30% of the miner value that year, plus my $28,800 in mining expenses, plus $14,400 in interest cost, and then plus we'll say $180 my cell phone bill. Wow, not multiplied by divided by 1. Let's backtrack here. Plus 180. Okay, So we have $73,000 in write-offs for my business. So any income I make, whether it's my 9-to-5 job, my wife's 9-to-5 job, because we can do our taxes together and start changing our incomes depending on if I make more money than her, if she makes more money than me, we can bring our incomes down and lower our tax bracket, right? You may still have to pay taxes depending on how much expenses you have. But for my scenario, I had way more expenses than income that was coming in. So I was able to bring my expenses down to nothing. Or my income basically down to the lowest tax bracket. And there's a certain amount of tax or income that's exempt from taxes, at least here in Canada. I believe now it's $16,000, but I think back then it was 15. So you'll have to check your country where you live. A certain amount of your taxes will be exempt if you make under a certain amount. So I was able to remove $73,000 from my taxes. Now my paycheck, I pay, I think something like $16,000 a year in federal taxes. It just comes off my paycheck. I have no say about that. So that's why for me, I got money back every year. And me and my wife also invested in our RSPs, which when you invest in RRSPs in Canada, you get, I believe it's about 30% back of what you own, of what you put in credits. So you can get a credit back. It goes against your taxes. So usually you get about 30% of that back. So on top of that, we had RSPs. And I also contribute to a pension at my work, which also gives me credits as well. So there's a lot of things you got to go into this. This is why you still need a tax professional. You shouldn't be using Joe from the bridge that just using QuickBooks or TurboTax. Go spend the money on a real good tax service, maybe a firm that has a team that can help you, because even the expense of doing your tax with a professional will be also another expense to write off, which I didn't add here, but yes, you can write that off as well. So make sure you guys use a tax professional. I am not a professional. I just learned this just like you can too. You can implement it and work with your tax professional to help you do this. Okay, so this is how we do it. We lower our income with expenses, with depreciation. This can work for anything. This can work for if you invest in stocks, as long as you get dividend paying stocks. Dividend paying stocks are income generating assets. Here in Canada, you can write off the interest cost. If you borrow money to buy income generating assets, you can write off the interest cost that goes along with that. So a lot of people, what they do is you can borrow money to buy dividend paying stocks in a portfolio, supercharge your portfolio, and you're going to have the capital appreciation of the stock over time. And you're also going to benefit from the cash flow that the dividends pay you, which also you're being able to keep that income because you're depreciating, or not depreciating, you're using the interest cost as an offset to the income that you're making on dividends. The same thing goes with when you buy real estate. When you buy real estate, you depreciate the asset of the house itself, and then also all the expenses that go along with owning a home and running, a rental property. That will go against your income of the rent, which will make sure you can probably have a wash where you're actually keeping all that rent in your pocket, as well as you have an asset that will grow in value. That's the millionaire strategy. That's how you do it. Now, being in the crypto, your crypto is going to go up in value, and you're eventually going to sell and take profits. Now, when you take profits in crypto, you have to pay capital gains. You can offset these capital gains with capital losses. And when you have a capital loss, you can keep this capital loss into the future. You can keep it going indefinitely until you have a capital gain. So for me, my situation with the miners is the miners go down in value over time. Miners go down pretty quick in value over time. They do lose their value. The hash rate will continue, especially in Bitcoin terms. The hash rate will continue to rise, which will reduce your yield, therefore making those machines less profitable over time. So the miners will lose their value. So I ended up selling my miners at a loss. So on paper, I have a capital loss. I bought them for $100,000. I actually sold them all for like $6,000. They went down pretty damn quick because also new machines came out with higher rates and hash rates. So I had a pretty hefty capital loss on my hands. So what I'm going to do is I'm going to carry that loss forward. So I sold my miners at the beginning of 2024, and I wanted to have more cash flow instead of having paying all these mining fees and the loan costs and everything like that. I wanted to deleverage a bit. So what I did is I sold them at a loss, and now I have a pretty big capital loss. So whatever I depreciated will be subtracted from that, and then what's left will be my capital loss. So when I do go sell crypto at the peak of the bull market, or whenever I'm going to take profits, I now have a capital loss to offset my capital gains. So for example, say I have $100,000 in capital gains. In Canada, we have a pretty good way we do capital gains here. In Canada, whatever your capital gain is, divide that by half, and that half is what you're actually taxed on, which is pretty sweet. So what you do is whatever your capital gain obligation is after you do that math, you get whatever you're going to have as capital loss, you fully offset it. So you can almost bring your capital gains to zero, or mitigate them quite a bit to your capital losses. So yes, you're selling your miners at a loss, or maybe you sell a house at a loss and you have a capital loss in your hands. But you know what? It's not bad, because in the future, you're going to have a capital gain and you can offset it that way. Looking back, my strategy could have been a lot better, but we have to go out and take action. Sometimes you can learn and read books all you want, but you actually got to go and do it yourself. So make sure you guys are not afraid to implement these. Think more entrepreneurial. That way you can start a business and have these expenses, because just working your 9-to-5 job, just being an earned income worker on a normal job, is actually the most taxed people in our society. So be an entrepreneur, start a business, even if it's just a side thing for yourself. Have expenses and depreciation and all these tax advantages that you have in our law and our tax law to be able to help us to keep more money and put more money in our pockets. So always reach out to a tax professional when you guys are doing your taxes. Always reach out to a financial advisor when you're looking at building wealth. Taxes and wealth creation strategy together is really, really good. And the more you are able to mitigate taxes and keep more money in your pocket, the faster you're going to be able to build wealth for yourself. So I hope this video helped you guys. I hope this video gave you some insight in how to stop taxes from eroding your wealth. And I hope you guys all get rich someday. Thank you very much for watching. And that's me, the Modern Canadian, out.